Hello again, everybody. Welcome to yet another webinar brought to you by FX Educast. I'm your host, Munther, Marji CMT, and I will be with you again for 3 hours today, looking for the best opportunities in the market. To all who are watching, thank you very much for being here. It's a pleasure to talk to all of you guys, and we are going to start immediately. If you have any, it's like usual, of course, if you have any requests, if you have any market you need me to look at, please let me know and I will do my best. One more thing, I'm trying to add some lights to the shots. So tell me, how do I look? Is it good or maybe not, because the light is coming from the downside? So it's a little bit scary. Am I scary? Okay, guys, welcome. We need to start talking about the market because there is, of course, a lot of opportunities, a lot of trading setups that we need to take a look at. And let me remind you that this free webinar is sponsored by QTime FX, our favorite Forex broker, who is offering you unbelievable spreads. QTime FX wants you to make money. That's why they are offering you these amazing spreads where you can trade and make profit with the smallest moves in the market. Imagine yourself trading with only 0.4 of a pip on the euro dollar and the dollar yen. I'm sure that will be a pleasure. And if that was not enough for you, we are offering you $500 of withdrawable bonus if you open your account through FX Educast. So contact us at FX_Educast via Telegram, and let's open this account for you, where you can, of course, apply all these trading ideas that we will be talking about and we will be providing on a daily basis. First of all, of course, what we need to do is that I'm gonna adjust my chat screen so I can see the chat from you guys. I really need to do this. Okay, so now, guys, I can include and see the chat. Okay, so with that out of the way, now the chat is working, because of course I need to update the URL so I can follow your chat and not miss one single comment from you guys or request. So with that out of the way, let us go ahead and start talking about the market. Of course, as always, we start with the euro. And what a story on the euro. You know I'm bullish, you know that. Yesterday we talked about jumping on the long side if we break above the falling trend line from a Monday's high, or if we fall down to the support area that is built between three retracement levels. We talked about this area many times recently, actually in every webinar we talked about it, because it's a key and very important area. I really believe so, and that's why we need to keep an eye on it, especially that yesterday's low was the sixth day with a low inside this area that we have seen recently. 6 days, guys, 6 daily lows inside this area. Of course, we reached the conclusion that this area is important well before these daily lows started to appear, and of course we did that with a confluence of retracement levels, We calculated the retracement for the whole correction. I'm calling it a correction up until now, but I hope it's more than that. Let's call it a recovery attempt. That's better. So for this recovery attempt, we calculated the retracements for the whole move, and we found out that the first key Fibonacci level, 38.2, is at 1067. And then we focused, of course, on the last part of the recovery, the rising move from October 15th low, not from October 1st 29-month low. And we calculated again, and we found that both the 50% level and 61.8 level are very close to the first level that we calculated, the 38.2 for the whole move. They are at 63 and 86. So 63, 67, and 86. This showed us that this area is important in retracement level terms, and that we should focus on it because it can provide the support the euro needs to start yet another strong recovery attempt like the one we saw up from October 1st low, which of course resulted in a move to the upside of more than 300 pips, just a few pips more than that. So after we decided that this is going to be our support, and of course I told my clients well in advance, and I was talking about it in previous webinars as well. After that, the euro started dropping, showing signs of weakness, and started visiting this area. And as you see, guys, the first time we reached a daily low inside this area was on the way up, even before we reached the top. October 17th low was 1063, exactly at the bottom of this area. But after reaching the top, we started falling down, and we started finding support in the same exact area, which was to me very exciting, and it was, and still is up until this moment, bullish. Okay, even with yesterday's drop, we are still bullish on the euro because we have found support in this area so many times that we cannot flip to being bearish about the euro without breaking the bottom of this area. Exciting news coming your way in a minute about testing this area. So first of all, just let me show you what kind of support this area provided. We talked about October 17th low being 1063, exactly at the bottom of this area. And when we started dropping, we have October 25th low at 71, October 27th low at also exactly 71. We have October 28th low at 83. We have October 29th low at 72. Imagine all that. And this one, I love this one. This is the Fed low, guys. When the Fed met on the 30th of last month, of course, commotion, you know, the price goes up, goes down when the Fed is announcing things. And even with this commotion, the drop, we saw a sharp drop, and then it was reversed to the upside. But the sharp drop, even the sharp drop seen during the Fed, guys, respected the support area, because the low, which was seen on the Fed day, was 1079, also inside this area. Can you believe that? Can you believe that? And as if that was not enough, having a Fed low, one among 5 daily lows, inside such an important support area, as if that was not enough. Yesterday, the euro showed, of course, signs of weakness, unable to break above the the falling trend line from Monday's high, and we started dropping. And when we did, I'm going to show you the daily low for yesterday, and you judge how exciting is that. This is the lowest price seen yesterday. It was during the American session, and we saw the price dropping to 1062. 1062, guys. We had 1063 on October 17th, and the bottom of this area is exactly 1063. So 63, a daily low, 62, yesterday's 3-week daily low, 3-week low. It was the lowest price seen in the past 3 weeks or so. And of course, we do have the 61.8 retracement level for the whole recovery attempt, and in the 60s are very, very close to this low. So having such an important retracement level and many daily lows around it, of course, confirm the importance of this area. Now, one thing is good for the euro. We're gonna explain that in a bullish way, and we have another observation that is not so bullish. The bullish observation, of course, is the low itself, because reaching a low that is this close to the bottom of the support area is, of course, a good thing. That means we found support at the bottom of this area. So the daily low was 62, the bottom of the area is 63. Obviously, this area is helping the euro survive. But the bearish observation is that even after reaching 62, even after testing the bottom of this area, we are still not creating the kind of hype, the kind of excitement that we need to see to the upside before we can say that this area has survived. So just take a look at this price action after testing the bottom of the area. Not very strong, actually. I'm sorry to say that, but it's been more than 12 hours since we reached yesterday's daily low, and yet we do not have a strong reaction to the upside. The highest we have seen is what, 80. So 18 pips up from yesterday's low. That's nothing. I want to see something more than that. I want to see the euro breaking important resistance levels in order to confirm that, yes, indeed, 1063.86 is the support that we need to keep our eyes on. And it's the support that we need to build our future strategies on. It's very simple, actually. If this level survives, we will continue to favor buying the euro. But if this area gives way, then we should stop doing so. And that's why yesterday's recommendation to buy had a stop that is 20 pips below the bottom of this area. Of course, the stop was not hit. Unfortunately, we got in. Yeah, that was unfortunate, because I think we had the buy at 36, and the highest price was 40, and then we saw this drop with the signals not doing very well, unlike other signals that we issued yesterday, which are doing very good, like the dollar yen and the pound. We had very good signals there, but here, no, it's not working very well. However, I'm not going to close this position. We have a stop, right? We have a stop 20 pips below the bottom of this area, and I'm going to keep the trade as is and keep the stop where it is. But in case a stop is hit, we are going to flip to a short position. So it's not going to be just a stop, it's going to be a stop and a reverse. Okay, of course, we can only justify, in my own opinion at least, of course, different analysts have different views, but my view is this: without breaking the bottom of this area that proved itself to be the support we need to keep an eye on for 3 weeks straight, guys, without breaking below the bottom of this area, don't short the euro. This is my advice to you. So at current levels, if you want to wait for a break of the area and then establish your short position, that's a good idea. If you want to wait for the price to start recovering and break an immediate resistance to establish a long position, that is also a good idea. What happens after testing these very important support or resistance levels or areas is that the move away from the important level, be it up or down, is usually strong enough, large enough for us to make some exciting profit. So we don't want to get married to the euro, guys. I am euro bullish, that's 100%. I have been so since it was at 109, and I have seen it rising 300 pips above the lowest price seen in the downtrend, That was expected for me. I was a very happy man. I made some profit on that. But even with this bias towards the bulls, I am willing to give all that up if we break the bottom of this area. And this is how you should trade, guys. Never ever get married to trades. Never ever get married to a certain instrument. Stay single. That's my advice to you. And the market, of course. I'm not talking about real marriage. The thing is that, yes, we expect the euro to go up. We want the euro to go up for a reason we talked about recently, which is that we do have a bullish formation on the chart, a long-term bullish formation, which is, of course, the bullish wedge on the daily chart that has been in the making for more than a year and a half. And breaking this formation to the upside should provide us with a fantastic opportunity to go long and make ourselves hundreds upon hundreds of pips. But it is what it is. If the market does not break to the upside, then we need to admit that it is not breaking to the upside. And we need to admit that, well, it's not working for the switch formation. And we need to look, of course, for other trading setups. That can happen. So, in summary, I would really like it if the euro survives here. And I still prefer to be on the side of the bulls because we found support where we should again. And when we find support where we should, that is bullish. So we are still finding support where we should, but that can change today. This is the thing. It can change because if we break below the bottom of this support area, then there is no reason to keep holding on to our long position. This was said in yesterday's report. That's why we placed our stop at 20 pips below the bottom of this area, I think at 43. And what we are going to do about that position is that we're going to keep it. It's not doing very well at the moment. It is the only position suggested yesterday that is not doing well. We are going to keep defending this long position unless it reaches a stop. Don't change the stop, guys. Leave it in the same place we placed it yesterday, and just leave it there. Don't risk more because, of course, if we start trading in the 50s and the 40s and then the 30s, we can drop all the way to 109.95. That is the next level that we need to care about. We talked about this in the previous sessions for this week. And when we reach 109.95, we could start recovering from there, but we cannot tell from now. Of course, we need the price to test this next support, and we need it to show us signs of weakness or strength. And of course, according to these signs, we can decide what are the chances of the market moving to the upside and what are the chances of the market moving to the downside. And then we, of course, pick sides. We prefer to be on one side, depending, of course, on the chart and what the chart is saying at that level. So we cannot tell from now. We know that 109.95 is the next important thing. But will it survive? Will we have 6, 7 daily lows around that level like we had with this support area? We cannot tell that from now. But once the price is there, we can start looking for signs to help us estimate the chances of recovering or resuming the drop seen recently. We have been dropping since mid-October, around mid-October. The highest price was seen on October 18th. And since then, we were unable to overcome that high, 1183. Okay, we need to overcome this high, but obviously we are more than 100 pips below that right now, so we need to focus on the support. Okay, guys, Pro Jack, how are you, buddy? Very nice to have you with me for one more day. Let me know if the lighting thing is working or not, because I'm using a new light that is coming to my face, because I've noticed yesterday that it is a little bit dim with the camera on my face and not having a strong lighting here. So let me know what you think, buddy. And okay, now we made it extremely clear. We do not change our mind on this thing. You know, the support 1063 to 1086. That's where the support should be. That is where the bulls should defend with all their might against the bears that are enjoying themselves, at least for the past 24 hours. So we, the bulls, including me, we need to defend the bottom of this support area. Now, what if things start turning around? Where can we start believing that after finding support for a sixth time inside this area, the euro has started recovering? When can we say that? Of course, we need the price to break above important resistance levels. And of course, the most important resistance, in my own opinion, in these areas is 1183. We are a bit far from there, so we need to check for closer levels. The falling trend line from Monday's high, if we connect Monday's and Tuesday's highs with a trend line, the trend line would be currently running just above 11 figure. Okay, and in the same area, we can see that we do have the moving average band around or surrounding the falling trend line, which is, in my own opinion, something very good for us, because this makes it easier for us to spot the important resistance levels. And here, of course, the resistance stretches from the bottom of the moving average area to the top, which is all in all about 15 pips. We need to break this. And inside this area, of course, I'm going to pick the trend line itself as the resistance. And this trend line is currently running at 1109. Of course, every hour it's going to, or 1108 if we want to be extremely exact. Every hour or so it's going to drop a pip. Every hour, not every hour. So when the new candle appears on the chart, this trend line would be 1, maybe 2 pips below where it was in the previous candle. So keep your eye on this trend line. Maybe we can adjust it a little bit like this. Like this. Yeah, of course, that will not result in much of a change. At 2 pips, inside of having it at 8, it's now at 1106. And I really hope that these two moving averages will start getting closer to each other and getting closer to the trend line, confirming the importance of 1106. So resistance, this is first thing I want you to note. Resistance, or immediate resistance, $11.06. This is it, guys. This is the first piece of information. Of course, the support, there's no reason to even start thinking or debating what kind of support we should count on. Which one? Support is 100% obviously at 1063 to 1086. Of course, with focus on the bottom of this area, because we have tested the bottom of this area. So we can focus only on the bottom of this area. So this is it, guys, for today. In my own opinion, this is it. And before breaking one of these two levels, we can go either way. I really prefer to go to the upside, but of course, if we break 1063, I'm gonna completely stop believing in recovery attempts or recovery possibilities from the current levels, and I will start thinking about what should we do at 109.95. So if we see 40s, 43 is our stop, 20 pips below this one, our stop is going to be a reverse. And the reverse, of course, we're not aiming for 100 pips to the side or so, we're aiming for enough pips to test 109.95, the next big thing. I'm going to explain to you in a minute why 109.95 is the next big thing, but let's focus on what we will be doing here. So we already have a long position with a stop at 1043, 20 pips below the support. Now, if we start trading above 1106, that would be good for our position. We'll be going back to, of course, first of all, the break even in the 30s, and then maybe some profit. And we hope to see profit during today. If, of course, with a condition, if 1063 survives, we will still have a chance of that, guys. I know you think that, well, we're below 111 and our long position is in the 1130s. So why are you still waiting for it to make some kind of profit? Why are you still believing in this in spite of the market moving to the downside? Very simple answer, because we did not break 1063. If we break 1063, that's it. I give up. So the first recommendation for today is going to be some kind of, let's say, a plan B for yesterday's recommendation, and that is, of course, sell at 1043. Our stop, we need to think about the stop, but the limit, in my own opinion, is 0995. It's not a lot of profit, 48 pips, and even if we get very close to 95 and then start rising, what you should do is you should close your position. Maybe we'll get to 98, for example, 97, and then start rising, and you see the price back 10, 15 pips to the upside, then I think you need to close. But what about the stop? Let us think about what kind of stop we should use. Well, I think that we can use this trend line, the falling trend line from Monday, as a guardian for the bear's attempts to go lower. So as long as we are below this trend line, of course, I'm talking about the possibility or the scenario where the price breaks below 1063. If we break below 1063 and then we keep trading below this falling trend line, then the bears would be okay. But if we go back above this trend line, then we should stop our position. And this trend line is currently running at 1106. Of course, you need to update this. When I say that this trend line is at 1105 or any other price at the moment, that means this is where you should focus right now. And of course, you should place your stop 20 pips above it, 10, 15 pips, depending on your risk management thoughts. But later on, with the new candles appearing on the chart, you need to update that. And usually you update it with a small number of pips, maybe between one session and the other, it's like 10 pips or so. We're not talking about 30 or 40 pips, maybe 5 to 10 pips between one session and the next. So during the European session, we are going to count on 1106 as resistance, and as long as we are below this one, we are going to keep the short position in case, of course, we break below 1063, which is still up to this moment. It's not happening, and I hope it does not happen, but if it does happen, we will be ready to take advantage of that. So 1106, I'm gonna place my stop at 10 pips above that. That's it. And during the American session, I'm gonna take a look at this trend line and see where it will be running. It will be running below 11, of course, I can tell in advance. It's going to be running 8, 9 pips below current level. So I'm gonna shift this 10 pips to the downside. I'm gonna make it 07 or 06, of course, depending on where the trend line is. So for now, it is 16. This is the first recommendation for today that we will be issuing, and it is a plan B. I'm going to call it a plan B kind of recommendation, which of course is only there to take advantage of the possibility that I prefer not to see happening today, which is breaking below 1063. I really hope 1063 survives, but of course, again, we don't get married to trades or instruments or setups or biases or any side of the on the market. We are traders, If we see an opportunity to make money by buying, we buy. If a couple of hours later we see an opportunity to make money by selling, we sell. Because I'm not buying the euro because I love the euro. I'm buying the euro because the chart is telling me there's a good chance of the euro moving to the upside. And maybe later the chart will show signs of weakness, and at that time I'm willing 100% to change my mind. You should use this mentality. Okay, you should always think about being ready, being completely ready to change your mind if the market is telling you something new that it was not on the chart this morning or yesterday. Yesterday you took a look at the chart and you saw that there's a good opportunity of moving to the upside because you have 1, 2, 3 signs that are pointing to the upside. But if we take a look at the chart again today and we find signs of the market moving to the downside, weakness signs on the chart, then be ready to change your mind. So what we are going to do right now is we are going to place this plan B recommendation. Okay, so of course it's going to be a sell stop. So sell stop at 1043. Our stop is 1116 at the moment. If things go well, of course, we change the stop to better levels, to less risky levels, and 0995 without a doubt is the next big thing. I'm gonna place my bet on reaching it. Okay, guys, so this is it for the euro. What about the long term? Of course, the long term, I want to draw this again for you. Yeah. What about the long term? Of course, we have this amazing trend line, which is a part of a wedge formation. This is my formation. This is what I believe is a bullish wedge formation, which is pointing to the upside. Of course, we need to break above it. And unfortunately, up until now, 2 attempts and 2 of them stalled only just a little bit above the top of this formation, which, you know, in a way it is surprising, because once we start trading above the top of a formation, we should continue moving to the upside. Let me take a closer look here. As you can see, first attempt here, second attempt here. In both cases, we came back to trade inside the formation. But this could very much be a corrective pattern. This looks a lot like a flat. If you know your Elliott waves, this looks like a flat. A flat is a regular flat. Of course, there are more than one type of flats, but a regular flat happens when the price corrects in 3 moves, 3 waves, of course, if you are an Elliottician, where they, you know, tend to be more or less equal to each other, very close in size to each other. So as you can see, of course, this is what could be wave A, and it is from 1183 to 1073, 110 pips. Then we have the B wave, which started, of course, at 1073 and stretched up to 1176, 103 pips. So that's very close, of course, to the size of wave A, which we just calculated, 110, 103, and the drop from the top of wave B to, which is, of course, wave C. The drop started at 1176 and it was down to 1063.64. So 112 pips. Okay, 112 pips, guys. So 110, 103, 112 pips. So we have yet another reason coming from the wave principle, or Elliott wave as a lot of people refer to it, to believe that if 1063 survives, the euro is going to be in a very, very good shape. It all depends on the support. We need the support to hold on, to be strong in the face of the bearish attempts, and after that, I assure you, there is a party, because this is corrective, and when the corrective pattern terminates and another impulsive wave starts, it is promising you, this wave, that more than 90% of the time it reaches beyond the top of the previous wave. We have failure sometimes in wave 5, if this is wave 4 and 5. Yeah, 5 can stall, can stop just a little bit below the top of wave 3, but that's not the norm. That's not what happens in 90% of the time. It maybe happens in 10% of the time. So there's a very, very good chance of reaching higher than 1183, depending on this corrective pattern and depending on finding support around the same area, which is, of course, it is what the 1063 key support. So now you can see, let me extend. Now you can see, guys, why I really keep my eyes on 1063. It's the retracement level is here, it's very close, and there is a 3-wave corrective pattern that is potentially going to really benefit the euro. And a push beyond 1183 from these levels looks extremely possible, with one condition. I just want 1063 to survive. That's the only condition that we have. And of course, when we start moving to the upside, we need the euro to show strength against resistance levels, which start with 1106. So after trading at 1106, I know we have another resistance in the 40s, 1144, I think. And after that, things will start to get very good. We're going to challenge 1183 and start trading above that. We talked about the targets. We do have a target for yesterday's long recommendation, and it was, I believe, 1260. We said that 1209 is target. It's a good target, but since it's very close to 1183, we expect that when the price breaks 1183, it's not going to move only for 20 pips and then stop. It's going to try to penetrate 1209 and reach the next big thing, 1260. Okay? One last thing I want to show you before we end this euro conversation is why I believe that the next big thing is 109.95. And I want to use another chart here. This is it, guys. I think, yeah, I need to adjust this a little bit to the bottom. Yes. Look at this level. It's the Fibonacci 61.8 retracement for the whole move to the upside. The whole move, guys, the whole recovery attempts. It's at 109.95. Now, please take a look at how many daily highs or lows are very close to this area. This is 109.95, and if we break the 60s, this is where we should wait for the euro with our long positions ready to take advantage of what could be the point where the next leg to the upside would start. So why 109.95? 109.95 because this, guys, first of all, it's a Fibonacci level. Now just take a look at these daily highs. October 3rd, 9.99. October 4th, the next day, 9.99. October 7th, at 10, not 1 pip above 10, only 6/10 of a pip above the 110 level. So it's 10.01, let's call it. Here, 96. Imagine that, 96, guys. This is the daily high for October 8th. Here we have 91 on October 9th. And again, October 9th during the agent session, 93. And when we started falling, we found support on October 15th, very, very close to this level. The daily low back then was 89, only 6 pips below it. So take a look at these tops, guys, and this one bottom here. And even these are also close to it. 11th of October, the low is 110, and 10th of October, the low is 10.01. So obviously, we are very close to this level all the time. We have been close to it. We have been stopping close to it on the way up, and we stopped close to it on the way down. So when we were rising, we found support here. Now, when we started falling here after reaching this stop, we started falling after reaching this stop, we started falling in both cases, we found support very close to it. So it is obvious that we do have an amazing and important support at 10.63 and another very important support, a backup support, let me call it, at 9.95. Now, one thing that you might think of, you say, well, Munther, okay, if we are going to short, if this support area is broken at 10.43, 20 pips below it, and we are going to close our long position if the price reaches 109.95. That's good. If we do so and the market moves in our direction, it's kind to us, it makes us some profit, then we're going to make 48 pips of profit, and that would be fantastic. Now, the next question is, why wouldn't we buy at 109.95? And of course, obviously, I cannot object to that idea. Of course not, because 109.95 is the next big support, and it's as important as 10.63. So I believe that getting there can provide us with yet another opportunity to re-establish long positions. After, of course, we close our short position at 109.95, we flip, we switch, we change teams, and join the bulls again. Is that a good or a bad idea, Munther? Of course it's a good idea. But I prefer to look at the chart at that time and to look for signs of reversal instead of, just blindly following that, yeah, now place an order to buy at 109.95. But I assure you, if the price gets there, I'm going to be on my chart looking for a reason to buy. If you want to place your order from now to buy at 109.95, that's okay, but you need to specify what kind of stop to use. And in my own opinion, sorry about that, this is the one I'm looking for. 965 is yet another support that we need to care about. It's not as huge as 9.95. It's 30 pips below that. So we should place our stop 20 pips below that. 20 should be enough. So this is plan C, let's call it. Buy at, sorry about that, stop and limit this guy. Okay, this guy, guys. If we get a buy around 109.95 and the price starts recovering from there, it has a great chance of reaching beyond 1183. So we are talking about more than 250 pips. More than 250 pips. In my own opinion, when we buy, if we buy at 109.95, we should not close that position below 1209, and I prefer it if you wait for 1260. So when you calculate it between 995 and 1260, that's 265 pips. So minimum 250 pips. And of course, on the way upside, we need to take care of the risk. If the market is very kind to us, if our trade is doing well, then we need to shift the stop in the direction of the market, right guys? So we have a plan C today, a plan B. Everything is ready, everything is in place. This is what I'm gonna do if we reached 109.95, but of course I highly recommend that you look at the chart first, because maybe the price gets a hard push to the downside and it goes through 109.95 without even stopping there. If we see that, we don't buy, of course. But if we see the price finding support around 109.95, that is when we jump in. So it depends on what the price is going to do around that time when we test 109.95. Okay, guys, so 109.95, buy there, stop at 109.45, and limit the sky. Our B plan, let me call this B plan, plan B, sell at 1043, and we already placed this order. So here I'm going to show you that order placed. So we're going to sell at 1043. Our stop is 1116 at the moment. During the American session, I'm going to push that lower 10 pips or so. Even if the order is not hit, I'm going to still change the stop, even if the order is still working. We are not in a position, but we do have an order. Even in that case, I'm going to adjust the stop around 10 pips to the downside during the American session. And my limit is, of course, 995, where we switch there. And from plan B at 95, we switch to plan C. We close the short and we buy. So come on, euro, drop to this level. Give me 48 pips of profit, and then give me the chance to buy at a very, very attractive price. Okay, guys, so this is it for the euro for now. Of course, with this we reach our first break of the day. And before we go to the break, I want to just welcome you guys. Harry, welcome, buddy. Jack, hi, buddy. How are you doing, guys, today? I hope you are enjoying this and getting ready to get into the market. And please let me know if you need anything analyzed, if you need us to check the important support and resistance levels on anything at all that you want to trade. If I have a chart for it, I'm going to do it with a smile on my face. That's my promise to you. Okay, so for now, guys, we're going to take our first break. Get yourself something to drink. Think a little bit about the market. Hold on to that long position euro that is not doing very well at the moment, but it's still, it did not reach a stop level, so we are holding on to it. We're not initiating a new position unless the stop is hit. In that case, we're gonna switch to a short position with a modest or medium limit, and then we have an opportunity to really put our faith in a long position with a real good target. But for now, just relax, take a break, get yourself something to drink, and we'll be back in a few minutes, 6-7 minutes, and I'm going to be back. And please let me know if you need to see anything analyzed. And a big thank you before we go to our break to our generous sponsor, QTime FX. Guys, they want you to make money. That's why they are offering you these sessions without you paying anything for them. Do you think this is free? If you do think that this is free, then you are wrong, guys. This is free only because of the generous sponsorship of QTimeFX, who is paying so you can get these technical views of the market and you can know where are the important levels and what are the best recommendations of the day. And they are doing so while offering you fantastic spreads, guys. Look at these spreads on the screen. Very, very tight and low spreads with zero commission guaranteed and $500 of bonus, withdrawable bonus, not trading credit like a lot of brokers do it. This is real money, withdrawable money, guys. So if you want to open your account today, come join us, come join the fun, and help support these free webinars by contacting fx_educast via Telegram and open your account today. So we are waiting for you. We are here to help you with anything that you need help with in opening the account. If you have any questions, shoot. If you want to trade real money, that's the only way to really learn about the market. Trading demo accounts is of course helpful for a few weeks when you are new to this market, but if you do not feel the pressure of trading real money, then you will never learn about the market. Never, guys. Okay, so come on, open your account with any amount that you have in mind, a small amount, a part of what you're thinking of investing, and start trading real money. And we are going to offer you trading recommendations every single day so you can make money. Thank you, QTimeFX. Thank you guys for being here. Our first break of the day, and see you in 5, well, not maybe 5, maybe 6 or 7 minutes, okay? See you guys. Okay, guys, welcome back. Welcome, everybody. How are you doing? Let me know. How was the first hour? Of course, we spent the first hour. We most of the time we spent the whole first hour just talking about the euro because I know you guys love your euros. Everybody want to trade the euro, so we talk about it more than other instruments. And this is one reason. The other reason is that we do have a great long-term opportunity on the euro, and we want to follow that the closest possible so you can take advantage of such an amazing trading opportunity. And as you can see, I turned off my spooky light. I had a lighting source that is coming from the downside, and it was looking really good for Halloween. But for now, I turned it off so I look normal. Okay, guys. Welcome back. Welcome, everybody. I'm going, of course, to read your comments and engage in talking to people who are watching us live right now. I'm very happy that you are here, guys. And of course, before we do start, I want to, of course, remind you that this free webinar is sponsored by our generous broker, QTimeFX. They want you to make money, guys. They want you to make it in this field, in this battlefield, in this business. They want you to be successful. That's why they are paying on your behalf, so you get this free analysis, free recommendations, and it all because QTimeFX wants you to make it here. They are offering you fantastic spreads, guys. Fantastic. And this is some of the best spreads I have ever seen all my life, and I have been in this business for almost 2 decades, 19 years to be exact. So I really believe that such spreads can help you take advantage of the smallest moves in the market. So you don't need the market to move much for your trade to get into the profit zone. You can cover your spread in seconds with such beautiful spread. So FX _ educast via Telegram. Contact with us there, and we will help you open your account today. And as I said before, and I'm gonna say it again, trading the demo is good for a couple of weeks, and that's it. After that, you will be wasting your time trading the demo. You should not waste your time on a demo account. You should feel the pressure of trading real money. That's how you learn. You will learn, of course, you will learn a little bit from the demo trading. And I recommend demo trading for beginners for a number of weeks. 2 weeks, 3 weeks, that's it. But after that, you don't have to do it on a demo account, because demo is demo. You know, it's not real. It is only for you to understand how to get in, to get out, to maybe to experiment with some trading strategies that you have on your mind. But after that, of course, you need to trade real money, because without trading real money, you are not going to learn how to trade this market. The market is not only analysis, there's a psychological and emotional side to it, and you will never experience this psychological and emotional side trading demo. There's no pressure there. If you lose your whole demo account, you're gonna open another demo account. Nothing lost. So you don't have to make decisions on the spot. You don't feel the pressure of real market, because it's not real money. And that, of course, you can learn technical analysis trading demos, but that's it. I want you to experience psychological and emotional factors, and that comes only with trading real money. So you don't have to put all your money. Of course, maybe some people come to me, they say, I'm thinking of putting in $10,000 and start trading. My first question, when they are new, of course, I'm talking about beginners. When they are new, my first question to them is, how much are you planning to invest in this market? They come back to me with the same number. Well, I just told you $10,000. I said, then wait, don't put $10,000 on your initial deposit. Why? Because you're a beginner, and putting the whole amount that you are thinking of trading right at the beginning of your trading career is not a very wise move. You still need to learn a lot about the market. And trading and making errors and making good trades and bad trades is a part of the process of learning. So what I want you to do, if you are planning of trading $10,000 ultimately, initially, you can start with only 10% of that amount. Okay, so you have $10,000 on the side, you want to throw them in the market, don't throw them all at once. Start with 10% of that. Give yourself the chance to trade with 1,000 and keep 9,000 in a safe place for the time when you know more about the market, when you experience real trading with this small amount, $1,000, and then you can add the rest of the money to your account. So, capiche? This is my recommendation to you. If you're a beginner, do not throw all your money at once in your account. Start with a small amount. Get the feel of the market. I want you to feel that real money feel that demo accounts will never ever give you. And after you feel that you're okay with trading real money on a smaller scale, go and add all the money that you have on the side for trading to your account and trade full scale. So welcome back, everybody. I'm very happy to have you here. Jack, Harry, how are you guys? Ram Heinz, hey, how you doing? Nick, I don't believe I have seen this name before. So Nick, if you are new with us, welcome, buddy. We are here every day. Come join the fun every single day. Heather, good day to you too. Michael, welcome back, Michael. Hi, back to you. I know my people. I know my viewers. I know my fellow traders, fellow soldiers in this fight to make profit in the market. So when there's a name that has been in the chat previously, I know. And when there's a newcomer, I know, and I am happy because we have more viewers. So welcome everybody to our second hour of the day. We're going to start talking about other instruments. We talked about the euro, and we do have a long position. The long position is currently not doing very well, but it's not out yet. We still have a fighting chance. Although, as I told you, we do have two observations on the chart that are pointing in different directions. The first is that we tested the bottom of the key support area, 1063 to 1086, and we found support extremely close to the bottom of this area. Finding support extremely close to the bottom of a key support area is bullish, of course, because this means that this area is currently helping us stop the drop. But the bearish observation is that even after finding support at the bottom of the area, the reaction is extremely limited and it does not look strong at all. So what I want the euro to do is I want it to start showing strength, and we do have, of course, resistance at 1106. This is the initial resistance, not the key resistance. Key resistance is 1183. But once we start trading above 1106, we should start feeling better about the euro. On the other hand, if we start trading below 1063, that means that this drop, this obvious drop, this obvious move to the downside is going to continue digging deeper. And if we do break below 1063, the next big thing that you need to watch is 995. And there, of course, we have a short position waiting for the possibility that we are breaking below 1063. If we do, our short order is there waiting for this to happen in order to make some profit, and that order has a limit and a switch at 995. So if we sell in the 1040s and we get to the 990s, we close the sell, we pocket some profit, and then we switch, we change teams, and we go long. Okay, so this is it for the euro today. Just a reminder, I called the order to sell the euro in case we break 1063 plan B. We sell 20 pips below the bottom of that area. Our stop is now 11.16. I'm going to update that to the downside during the American session, maybe take it lower 10 pips. Our limit and reverse is 9.95. Order is placed for plan B, but for plan C, yes, here it is. Plan C is, of course, the plan that we have to take advantage of testing 109.95 in case that happens. Buy at 109.95, stop 109.45, 50 pips of stop, very reasonable stop, and the limit is the sky. Okay, a minimum of 250 pips. And let me close this. This looks better now. So the euro is done. Shelton, welcome, buddy. How are you? Yeah, the dollar yen trade, you're happy about the dollar yen trade. Yeah, we had good trades yesterday on the dollar yen and on the pound. If you followed that trade, we had a short, and that short made a good profit. Nick says he got 57 pips. Fantastic, Nick. Fantastic. That's great, buddy. Congratulations on this profit. Yeah, the buy dollar yen is our best trade for this week. It is approaching 100 pips of profit. It came very close to the limit yesterday. We're going to talk about it after we talk about gold first. And then the pound, of course, we had a short with the profit. But the only recommendation from yesterday that did not make profit is the euro. We're still holding on to that. We hope that it will join the dollar yen good trade and the short pound good trade. They both made profit, but the euro is still struggling with going higher. We hope the euro will turn and join the group, and that will give us 3 out of 3 from yesterday's, of course, recommendations. 3 winners out of 3. Currently, we have 2 winners out of 3 from yesterday's trading and trading recommendations. So immediately, let's go to the precious metal that you love. We were lucky yesterday. I have to admit this, guys. We said that if we get to 107.90, I think, we should buy, and we placed an order. And a few hours after we finished yesterday's webinar, I looked at the price and I saw it way down below where it was during the webinar. And I said to myself, I hope our order was not triggered, and it was not triggered. I was very happy. I think the price stopped maybe 10 pips below it. Before triggering our buy, we had a buy. Of course, we had a buy in case we break to the upside. That break did not come, and I went back to my QTime FX trading platform and I deleted the order. As I told you guys, when we place these orders around current time during the webinar, what we need to do is we need to cancel the ones that are not triggered by Europe close. So when the European session is over, around that time, it's not about a 1 minute limit, around the time when Europe is closed, I usually delete all the orders that were not hit, because it's the end of the day. The next day we're going to take a look at the chart and we're going to look for other opportunities. Lucky for us, I think our yesterday, let me see where we were trading yesterday. I think we were here in these areas around 5 to 6, okay, and we had an order to buy at 7.9. The highest price on this chart is 7.15. So we are talking about what, 7 pips, almost 7 pips, or something like that, that prevented our long order from triggering. Thanks for the good fortune. I'm very thankful for the good fortune, because had the price gone just a little bit above this trend line, we would be on the buy side, and then the drop would have left us suffering a stop. But that did not happen, of course. The order was not touched because it was just a little bit above these levels. And that shows you that placing the order was a good thing. We placed it at the right level because the price did not reach that level and started dropping. If it did reach the entry level for our order and then started dropping, that would show that we did not place the order in the right area. But thankfully we did. That was great. The only thing that may be bothering in such situation, we dodged a bullet here, but the only thing that can be bothering is that we did not use the move to the downside. We only had one order yesterday. Usually, of course, we have two. You know that. We have a buy and a sell. Most of the time, this is how I generate my trading signals to my clients and my viewers, and recommendations I give them. Yeah, this is the resistance you need to care about. This is the support you need to care about. A break above this resistance, we go long. A break below this support, we go short. This is what I usually do. Unfortunately, yesterday, I gave only one. Maybe I was in a hurry to talk about the yen. Maybe that's that's the reason, because I'm in love with the dollar, yen, and the pound these days. They are moving just as I expect. But the euro and gold, I'm not doing the same kind of magic here. Let's see if we have a good trading opportunity on gold today. So yesterday, no trading. We had an order. It was not touched. So no winners or losers on gold. We were flat all day yesterday. Now, let's see. First of all, let me look at the daily chart. And I'm sure that yesterday's trading has left, of course, because of the difference between the high and the low. Yesterday's trading has left behind a horrible looking day. And of course, as you can see, it's obvious, guys. Yesterday was a very bad day for gold, and we saw the price dropping from above the moving average band on the daily chart to well below it and closing here. Is this a bad thing or a good thing? This by itself, of course, does not confirm 100% one way or the other. It's a weakness sign, of course, but we need to look for other signs to see if they support this weakness sign or not. Ethan is also talking about the profit that we made with recent recommendations. Great. Yeah, we did very well on the pound and the dollar yen. But as Michael says, yeah, the euro dollar recommendation from yesterday is not doing very well, but it's still there, guy. It's still there, my friend, right? We're still fighting, and we did not reach the stop level. I'm not going to touch it. I'm going to keep the stop where it was yesterday and the limit where it was yesterday. In case we reach the stop, well, we have to admit defeat, but that did not happen yet. So we still have a fighting chance, Michael, and I hope that the euro will turn around today. So the daily chart has a weakness sign. How about the 4-hour chart? What I want to do here is I want to check with the indicators that I usually use. And of course, now you are used to this screen, right? MACD, stochastics, RSI. Sometimes I use the SAR system. And of course, the moving average band is very important in my decision making. What is showing on this chart is that, yeah, there's a chance for gold because we are already in the oversold area for both stochastics and RSI. The MACD did generate a sell signal in the right time. My God, that was an amazing signal. I'm sorry I missed it. On the 4-hour chart, as you can see, we have a cross, a bearish cross on the MACD that appeared. When was this? Oh, maybe that's why I missed it, because it happened during yesterday's agent session when I was sleeping in my warm bed. I was not watching the market at the time when this cross happened. Of course, you can't follow the market 24 hours a day, so sometimes you're going to miss some chances. When you are lucky to be there on the chart, when these crosses and these opportunities, these signals are generated by either, of course, the price itself or the indicators, then you are lucky. But sometimes you're away, you're with family, you're having lunch, you're out for something that you really have to do, or you're sleeping. It's a 24-hour market. Nobody can follow it 24 hours a day. So when this fantastic cross happened, of course, it happened while both the the stochastics and the RSI were sloping to the downside, and that confirms the weakness. With this cross, we could have sold gold around these levels, and that would have been amazing. But unfortunately, we were not watching the chart when this cross happened. So we need to look for the next opportunity and see what can we do here. Okay, so now the 4-hour chart is promising that there could be a chance for the bulls here, but that by itself, of course, reaching the oversold or the overbought area by itself is not a reason to get in the market. This is what I always say to my trainees, to my clients, to my viewers. Just because we are in an oversold area, that does not mean you need to go to your QTimeFX trading platform and click buy. No, you have to wait for more signs. Reaching oversold or overbought indicates that a reversal might follow. This could happen, but it does not generate a signal by itself. That's why I'm gonna switch to the hourly chart and look for more signs of strength or weakness. As you can see, guys, we just talked about a cross that happened while we were not watching the market because it was very, very late at night. Now, the MACD itself, the indicator that generated that fantastic short signal, is about to generate a signal. And as you can see, the MACD itself is touching the signal line, and once we see the MACD line above the signal line, on a close, of course, we need to wait for the close, then that is a buy signal generated by the MACD, the same indicator that generated the fantastic short signal during yesterday's agent session. So not now, but if gold manages to show additional strength, then this might be a good place to buy. So this is what the indicators are saying. Of course, this is supported also by the slope of the stochastics going to the upside after being in an oversold area, and the RSI as well. It's the same thing. We were in an oversold area and then we started moving to the upside. So once the MACD crosses, I really believe that the precious metal will have a chance of moving to the upside. Now, after taking a look at the indicators, let's see what our main decision-making tool is saying. And of course, our main decision-making tool is what? What, guys? Anybody? It is definitely the price, not the indicators. First thing that we can see here on the chart is that during the agent session, we have been finding it hard to overcome 87. The highest level here is 87.3. 187.37. So in the $1,487.30 we are finding some kind of resistance. We need to see the price breaking above this level in order to generate a buy signal. And of course, we need to look at the MACD at that time. If we start trading above 87.30s, we need to look at the MACD. If we have a cross, then we will have a signal from the price itself, from the MACD, with the stochastics and the RSI moving to the upside. So everything will be looking very good for us to go back to mean levels, And mean levels are the ones, maybe the best indicator that reflects them is the moving average. So once we start trading above 87.30s, we should expect the price to go back to the moving average area, which starts currently, at the time being, of course, it's a dynamic level. The moving average is a dynamic support or resistance, so it keeps going up and down depending on the latest price action. The lowest level at the moment is around 94.60, and the highest level in this area is around 99.20. This area will be targeted. It will be our target once we start trading above 87.30. So let's try and make that into a trading strategy. So we need to buy above 1487.30. So it is 37 to be exact. Let's call it 40. So this is the resistance. How about 10 pips? May be very close. How about 15? 15 is enough for me. 8.9. So this is my entry. Okay. My stop, we still have to talk about the stop. The limit should be inside this moving average area. I think that's enough. And it starts at around 95. So the minimum is 95, the maximum is 1500. So between these 50 pips, let's say, we should find a resistance that we need to count on and consider it as a limit for our buy position. One of the things that can help us identify a good limit for this position is retracement levels. We use the retracement tool. And how about the 50% level? Let's see, where is that? It is actually right in the middle, and it's at 97, as you can see, right in the middle between the moving averages. So what about 97? Okay, 97, 1497. That would leave us with 81 pips of profit. Not bad at all. So it's good enough for me. Now I need to see where should I place my stop. A lot of people look at this chart and say, well, we can place it 1 pip below this bottom. This might be a good idea or not. Just by looking at this bottom, just like this, without connecting that to previous support and resistance and retracement levels, in my own opinion, that's, jumping to conclusions. So you need to take a look at the chart. You need to see if we have retracement levels that we need to care about. Not really, actually. Let me see. No. So I don't believe that we have because of course we have already traded below the Fed low. We used to calculate retracement levels for this move, but now that we have broken or at least traded below the Fed low, that is something that takes away the use of the retracement level tool from our hands. So we need to look for other levels in order to see if placing the stop below this yesterday's low is a good idea or not. I'm going to use horizontal support levels. Very, very simple and basic technical analysis, guys. Some people believe that technical analysis needs to use a lot of equations or computer programs or very complicated calculations. Very complicated calculations do not guarantee profit. And there's an advice that I've heard years ago, and I'm sticking to it. Keep your analysis simple. You don't need to complicate things. These very simple tools have been working for more than a whole century. Charles Dow, 1890s. Then we have Livermore, we have Elliott, we have all these great people, Hamilton, everybody. They have been, or they used these tools for tens of years, upon tens of years, between them more than 100 years, more than a whole century of using these very simple tools to make trading decisions. And we're still counting on them today. So you don't need to make it complicated. Very simple support and resistance. If you can reach the conclusion that this is the support that I need to care about, this is the resistance that I need to care about, that's it. That is it. Michael Marcos, one of the legends of trading, used to use only breaking and failure to break important levels as his main tool to make decisions, and he made millions upon millions of profit in the market. And you can do so as well. As you can see, we are doing very good most of the time. Yesterday we got 2 out of 3 correctly, and the third is still fighting, did not reach the stop. So that these recommendations that you see, as you can see right live in front of you, we are using very simple tools and they work. So using our simple support and resistance analysis shows us that we do have a support area here that provided support several times. Here. There's an area that starts, let's say, with the Fed low, which is 80.90, very close to the 80 level, and of course it stretches to the 70s. We have 77 here, and I think 73 here, 73.8. So it's a wide support area. We can neglect this as only a shadow, but having 2 daily lows that are very close to each other around 77 means that 77 is important. We have levels around 80 here, so between 80 or 81 and 77, it's obvious that we do have a support area. Now the question is, after finding this support area, can we place our stop below 77? So it's not about only analysis, it's also about risk management. Is this a good stop? Does it look a little bit more than what we want to do, more than what we are willing to take on this trade? Yes, it does. If we want to place the stop 20 pips below 77, that's 75. That would leave us with almost 140 pips of loss in case our stop is hit. And that's not the kind of risk that I'm willing to take. Yesterday, we showed you live that when you do have such situations, you can lower the trading size. And we placed an order on the precious metal, on gold yesterday, with only 0.7 of a lot, not one lot like we used to do all the time with all the other recommendations. And I hope that you remember that, because it's very good to learn some risk management as well. So what are we going to do with this one? We have 2 options: smaller trading size or smaller stop. That's it. We need to pick one of the 2. So what I'm going to do is that since the Fed low is 80.90, and since yesterday we only saw shadows on the hourly chart below the Fed low, I'm going to count on the Fed low as support and say to myself, well, if we go for a second time below the Fed low 80.90, then it's probably going to go below 77. So I want to give up on this recommendation once we start trading below the Fed low. Let's say 20 pips below that would be at 78.90. Let's say, if that makes things better, 78.90. If it's 20 pips, that would leave us with exactly 100 pips of a loss, and that is the maximum that I'm willing to take. I don't take stop losses that are more than 100 pips. This is the absolute maximum if I'm trading, of course, the usual trading size. If I really want to get in and there's no other way but to place a stop at 130, 140, 150 pips of a loss, then I will have to lower my trading size. So it's one or the other, guys. You cannot place a stop at 150, 160, 170 pips on a trade and leave it as it is in terms of the trading size. Your trading size should be lowered so the dollar value of this stop loss is less. And that's how you control risk on your account and your trade. Yesterday we had crude oil analysis. We said that it could rise from here, and it did. The price was around 56.70, and it went during the day to levels above 57. But we said to ourselves, we're not gonna take this chance because of the vast stop loss level. It was around 170 pips, and we did not find a way around that. We didn't want to place our stop 50 or 60 pips below the entry level. So we said, well, yeah, this looks like it's going higher, but where's your stop, man? It is way, way below the entry level, and that's why we favored to let that chance go. And it turned out to be a good chance, but of course, from a risk management point of view, it was a little bit too risky for our appetite. So this looks good, but since the stop is 100 pips, of course 1497 is a resistance, but since the stop is 100 pips, we might want to push the limit a little bit to the upside in order to keep our risk to reward ratio reasonable. We don't want a stop that is larger than a limit. In that case, if we get one trade right, one trade wrong, we're gonna end up in a loss. But if we have, for example, limits at around 90 pips on average, and stops that are about 60 pips on average, then even if we get one right, one wrong, one stop and one limit, one stop and one limit during trading 50, 100 trades, then you will end up with profit. And this is, of course, what we are looking to achieve. So I want to push the limit to levels that are more than 100 pips. And that, of course, can be done easily. It can easily be done because the 50% level, which is, of course, important, is 1497. But I want to push that higher to levels that are just above the 1500. Landmark 15.2, 1501.2 is the 61.8 retracement for the drop from yesterday's agent session high to the low seen during the day. So if we retrace 61.8% of yesterday's move, we're going to reach 1502.2, 1501.2. Sorry, I keep reading it wrong. I don't know why. So with this, now we have a limit that is more than 100 pips and stop at 100 pips. That's fine. That's okay in my opinion. But there's a note: pay attention to 1497. If you only reach 1497 and you look at the price and you say to yourself, well, it's trying to break it, it's not breaking it, and we start dropping, then I suggest closing your position. Of course, by then you would be in a good profit, and it will be an easy decision. Of course, when you are in profit, it's easy to click that close button, but we are human beings, and when we are losing money in the market, we find it hard to do so. So guys, this is our second recommendation for today, and I'm gonna place this order. Of course, I'm gonna place this order on my QTime FX account. So buy stop, where 88.9, okay. My stop is exactly 100 pips, 78.9, right? Yes, and my limit is 1501.2. And place. And yeah, we are in. We are ready to take advantage of gold if it starts recovering after yesterday's setback. One note, although we are, of course, we believe that trading above the 87.30s should result in a move to the upside. This is a recommendation until the end of the European session. By then, it and any other order that is still in place and not touched, not triggered, should be canceled. Okay, guys? So this is the agreement I have with you for now. Close or cancel the orders that are not triggered by the end of the European session. Now, a serious short position can be initiated if we break below this area. But for the time being, I'm not going to issue a short signal because we still have support levels that can give support to gold, and it might be a little bit too late to short it now after the sharp drop from yesterday. Maybe we can start thinking about a short if we retrace a good percentage of this drop and we find ourselves at 1501.2, for example, touching this retracement level, this key and important retracement level, and then showing signs of weakness. That might be a good place to short gold. But from where I stand now, I'm gonna issue only one signal: buy at 1488.9, stop exactly 100 pips, 1478.9, and the limit at 1501.2, which of course means that the limit is 123 pips. So a limit of 123 pips, a stop of 100 pips, it's okay. Of course, gold is a volatile instrument. You cannot trade gold with stops of 30 pips or so because it moves more than that, sometimes in one single minute. So with this, guys, time flies. Time really flies. It is time for our second break. Before I go to my break, I want to read some of your comments. Heather is excited that we are analyzing gold. Yes, we are, and I hope that you place this order, Heather, and I hope that tomorrow you come back and tell me that you made some profit buying at 1488.9, and in the next 24 hours. It does not have to be the limit. If we make 40, 50 pips on this trade, that's great. By tomorrow webinar time. Ethan, what do you think about that gold drop? Well, as I told you, buddy, we failed to break above the falling trend line. We placed an order to buy above that trend line. It was not touched, so the price dropped, failed to break above that trend line. From a technical point of view, failure to break, of course, above that trend line is the reason for this drop, but the drop has reached levels that are extremely close to what we have been finding support around recently, especially mentioning the Fed low 80.90. Yesterday we saw 79.20, that is 16 pips below the Fed low, and we only traded below the Fed low for a short period of time before recovering to levels above it. So we are finding support around the same area. It's more or less the 1480 level. Okay, so it's above 1480, below 1480. Maybe the market is thinking about surviving at that level or breaking it, and of course the market will understand that in two completely different ways. If we survive around 1480, it might be time to move higher again. If we break 1480, we might be diving to the 60 that we have seen recently, 59, I think, the lowest price in the past month or month and a half. And with the Fed and the rate cuts, I really believe it's very hard for euro to for the gold to crash. I really believe that dropping to levels that are close to 1400, for example, or below 1450, below 1459, the recent bottom that we saw. I really think it's very hard because the dollar is not expected to do great. Of course, I'm not talking about technical analysis. I'm talking about the Fed and what the Fed is doing. 3 rate cuts so far, guys. How can the dollar go up? It still can, of course. It's a market. Anything that can happen, but it's not what is expected. No, it would be a surprise to see, at least to me, to see the dollar achieving more gains than it did during this year with 3 rate cuts. That would be something amusing, something amazing to see in front of us. Heather, the bonus is still valid and it's going to be valid because we want you to use it. We want you to take the $500. We want you to enjoy the money. We want you to trade. We want you to make money. We are your broker. Our business is successful when you are successful. So come on, open your account, get the $500 and trade successfully with us. Nick, great. Ram Heinz, everybody, guys, thank you very much for being here. We're going to take a break, and after that break, what I'm gonna do is I'm gonna talk about the very good positions that we had yesterday, the long dollar yen and the short pound, and what to do next on these two instruments that are moving exactly as we have been expecting recently. So the good part, the profit, we talked about the euro, it's not doing very well, the long euro position, but the long dollar yen position and the short pound position are doing good, or they did great yesterday, and we're going to talk about that, and we're going to see what are we going to do next on these two exciting instruments. So another break, guys, another time for me to wish you a few minutes of relaxation, listen to some music, get yourself something to drink, think about any question that you might have about the market and or about our forex broker QTime FX that we really like, and I will be more than happy to answer your questions about that when I come back from my break. And of course your London is going to open in a minute, and after the open, of course, if there's any move that deserves our attention, we're going to talk about that. I see the euro touching the current daily high. It's still around 80, not a lot of movement, but it is trying. So after the break, we're going to talk about that, and enjoy your break, guys. Meanwhile, of course, let me remind you that QTime FX is offering you fantastic spreads, superb spreads, 0.4 of a pip on the euro dollar and the dollar yen. And as you saw yesterday, we had positions on both of these instruments. Imagine yourself trading these low and tight spreads with zero commission. You know, guys, some brokers offer you great spreads, but they cover the difference with commission. They say, well, we're offering you this fantastic spread, but we do have a commission on top of it. So why is that something that the trader should be excited or happy about? You're saving me on spread and you're taking it back with commission. No. This is not how we do it here. QTime FX, very tight spreads, very low spreads, and absolutely zero commission guaranteed. Not only that, we have $500 for every one of you sitting there waiting for you. When you open your account, they are going to be yours, and it's not only trading credit, guys, it is withdrawable $500 in your account when you open a real account with us. So come on, contact us at fx_educast via Telegram, and let's open a real account where you can trade all these trading recommendations and enjoy seeing profit in your account. This is it for the second hour, guys. A short break, and then we are going to move to our third and last hour of the day. Thank you all for being here. A short break, and I will be back after 5-6 minutes, something like that. See you then. Hey guys, how are you doing? How's everybody? I hope you're doing great. I hope you. This is me, guys, and I have joined chat, and I will be writing, commenting on what you are talking about. I'm gonna check your comments, and sometimes, of course, I'm gonna respond by talking. Sometimes I'm gonna write something down the chat. So I'm very glad to be with you guys. Okay, so for the past 2 hours, we have been talking about your favorite instruments, and now we are going, of course, to continue talking about other instruments. Some of the instruments that we will be talking about are the ones that we had good fortune with yesterday. First of all, of course, let me remind you that this webinar is a generous sponsorship by QTimeFX, your broker who wants you to make money in the market. And that's why they are offering you all of these sessions, guys. They are paying on your behalf, so you get the best trading ideas every day. And of course, the accounts that you can open with QTimeFX are fantastically prepared for you to take advantage of even the smallest moves in the market, because first of all, we have very, very tight spreads, and again, we don't have commission at all, and on the top of that, we have a very generous bonus of $500 withdrawable money, not just trading credit. Okay, so hi Oliver, thank you for your comment. I'm one of you guys now. I'm writing comments, and I will be joining the chat. So guys, let us switch immediately to our charts, and just a quick look. Gold, it's not moving to the upside. Of course, our order is above the agent session high, so we will not be buying unless we start trading above the agent session high. On euro, it is still pretty much where we left it before the break. Not a lot of movements. We really hope that it will push to the upside and break through the resistance at 1106. Now, dollar yen. Okay, so the dollar yen, guys, we have, of course, we have a position. We already have a position on the dollar yen. We bought at 108.38, which means here, these areas, and we have been holding it since Monday. Yesterday we came extremely close to our limit. Our limit was 109.38, which is exactly 100 pips. Of course, I have moved the stop, as I said before. We moved it to plus 10 pips, and now it is at plus 20 pips, I think. Let me double check my trading platform immediately. Yeah, so we do have, yeah, our entry is 38, our stop is 68. Now we have the stop at a profit of 30 pips. Imagine that, guys. We are having a stop on a profit of 30 pips. That's a fantastic feeling. This is something that I want you to get used to in your trading. When a trade is doing well, move your stop to the profit zone. And if it goes further into profit, then move your stop further into the profit zone. When you learn to do, or when you get used to do this all the time, the number of trades that will get you good profit and then go into the loss zone will be almost zero, which of course will have a tremendous effect on your results. I want you to have the best results at all, the best of all results, guys. I want you to be the best traders. I want you to be the envy of your friends. You know, look how Oliver trades, look how Ram Heinz trades, how Heather, how Ethan, how Nick, how Michael, how Harry trades, how everybody of you guys. I want you to be the envy of your fellow traders. When you get 40, 60, 70 pips of profit and your stop is at plus 30, and you see a fellow trader who has been in 45, 50 pips of profit, and then his trade turned into the negative zone and he was stopped out, and he is telling you his story, and you say to him, well, not me. I know that when my trade is doing well, I need to move my stop to the profit zone, and that's how I protect myself. And when I get a good trade, I will never let it go bad. So the traders around you will be start thinking, oh my God, Michael is a good trader, Heather is a great trader, Ram Heinz is a fantastic trader, and Oliver is a super trader, and every one of you guys. Okay, so this is what I want you to really experience. When you have a good trade, move your stop. Now, we do have a stop at profit of 30 pips, and our limit is at 100 pips. Yesterday, we came very close to it. Unfortunately, we stopped in the 20s, 24, 25, that was the highest price. I think 24.7, yes, so it's 25. Our limit was 38, only 13 pips above yesterday's high. I really hope that today we are going to see the limit done, and in the next few hours. We're not very far from it. We need 30 pips. And after this modest retreat, I think that we have a chance, and that is for two reasons. First reason is that we have this candle here, a doji, which came after a drop. Of course, when it appears after a very small drop like this place here, it does not mean a lot. But when you see a good move to the downside, enough size, and then you see a doji or a doji, I'm not sure, but Steve Neeson says a doji. And he's, of course, he's the highest authority on candles, at least in the Western Hemisphere. This is one reason to believe that dollar yen will continue moving to the upside. The other reason is that we have been finding support for the past 3 hours around the moving average 35. It's the top of the moving average band. And even if we drop towards the bottom of the moving average band, that's fine. We don't have a problem with dropping to the 108.80s, further 20 pips from current levels. No problem at all. The problem is in case we drop below the moving average band, we start trading below the moving average band, that is going to be a problem for our long position. But we do have a stop at 68, so it's okay. If we drop below 80, 20 pips below, 12 pips below the bottom of this moving average band, and we are out with 30 pips of profit. But we hope that will not happen. What we want to see happen is we want our limit to be hit. And I really want, especially after seeing this, I can count this as, let me show you my wave count here. This is a strong move. Usually the strong moves are either wave 3 or wave C. In this situation, of course, we have many signs that the overall trend is to the upside. So we are going to count it as 3 because it's an impulsive wave. Impulsive waves are the ones that move with the general direction of the market, while corrective waves are the ones that move opposite to the general direction of the market. So because we have many reasons to believe, and we have been talking about this for days, we have many reasons to believe that the general direction of the market is to the upside. I really believe that we can count this as 3 and this as 4. Let's see how this goes. This is the lowest price, so maybe here a diagonal, or we can also, sorry about this, 5 should be above, of course. We can also count it as this. This makes more sense to me. Wave 2 is usually the wave that retraces a large part of wave 1. So 1, 2, and this is 1 of 3, 3 of 3. This sideways action here could be 4 of 3, and then a thrust 5 of 3, and then we have a correction, 3 wave corrective pattern. We can count it like this. Not bad at all. From where I stand, this looks bullish. Of course, we are going to specify a resistance that we need to break in order to keep the bullishness, but my point is that there's a good possibility of moving to the upside. So what my greedy human nature is telling me is this: how about we increase the limit? Now, the worst case scenario for now is a 30 pip profit. So if our stop is hit, we are going to get away with 30 pips of profit on this trade. So why not take chances? It was obvious that the 930s is the resistance to watch, and we came extremely close to that yesterday with reaching the 920s. Now, it is an important resistance, but that does not mean that we have to stop at that resistance every single time we go there. So is there a chance of us moving much higher than the 930s? Of course, there's always a chance. But if we want to get greedy today with the dollar yen, we need to keep an eye on the 30s. So if you want to cancel your limit at 30s, it's okay. If you want to adjust it to the upside, it is okay, but with one condition. If we get to the 30s and we seem like we are not able to break it, then close your position. That's all I'm asking for. Okay? Now, the other question is, let me make this more reasonable. The other question is this. Okay, Munther, you really believe that the 930s is a strong resistance? And my answer is, of course, yes. Now, the follow-up question is, if we don't want to close our position in the 930s, where should we close it? Or where is your new limit? To answer this question, of course, we need to take a look at the chart, and we need to find the next best thing after the 930s. What about the two-thirds Dow retracement level? It is in the 70s. Well, that makes a better target, of course. Do we have signs that the 70s is an important resistance area? Here we do have a top, a significant top, a significant short-term top that is above that in the very, very early 90s, 91, 92. So having a limit at 75 is okay. It will be before we reach this previous top here. And it is, of course, a Dow level, a Dow retracement. Sorry about that. It is a Dow retracement level. So I'm going to change my limit, guys. And I know I sound greedy, but you know, it is it's not a greed. It's not greed. It's just that we're having a good trade and we want to make the best of it. So the first thing that we are going to do on the dollar yen today, adjust the limit from 109.38 to 109.75. This is the first thing that we are going to do. And we do have a note, watch price action in the 109.30s. If it shows weakness, sorry about that, weakness, close the position. If it does not, if we don't see weakness in the 930s, then we leave our limit as, of course, our new limit, 109.75 as it is, and we adjust the stop. This is the final note for the dollar yen. We adjust the stop. Adjust the stop to the upside if we reach higher levels above yesterday's or yesterday high. It should be yesterday, not yesterday's. So these are my notes for today. I'm gonna adjust my limit from 109.38 to 109.75, and my stop, current stop, let me just remind you that our current stop is plus 30 pips at 108.68. So this is the situation that we are in. By increasing our limit from 38 to 75, we are increasing it from 100 pips to 137 pips, which is of course better than 100 pips. Don't you agree, guys? 137 pips of profit is better than 100 pips of profit. So let's try and make the best out of this trade. We are currently running or trading, very close to the 109 level, just pips above that, and we are hoping for the best. Keep your fingers crossed, and let's hope that this trade will reach its limit during the next 24 hours, and we'll be talking about reaching 109.75 in the next 24 hours or in tomorrow's webinar. Okay, so no changes here, no new recommendations. We believe, and we have reasons to believe, that there is a capacity for more upside action, and this is obvious on the hourly chart, most of all, with the price finding support. Finding support in the moving average band, and then recovering. We are starting to recovering after a doji candle, a very bullish count, 1, 2, 3, A, B, C, and 4, and then of course, as you can see, the termination point of wave 4 in this count is very close to the termination point of this sideways wave 4 of 3, which preceded this wave 5 of 3 thrust, and this is something that is well known in the Elliott wave guidelines. Usually the correction terminates very close to the previous wave 4 of 1 lesser degree, and so everything is pointing to the upside, guys. Elliott, moving averages, candles, everything is pointing to the upside, and that is why I prefer to adjust my limit to a better limit to achieve more profit with this trade, and I hope we do, guys. So we are doing great on this front. Our current profit is around 70 pips, 65 pips, and our new target is 137 pips. Our stop, imagine that, it's a fantastic position to be in. Our stop is at 30 pips of profit. So the worst thing that can happen to this trade is 30 pips of profit, and the best thing that can happen is 137 pips of profit, and we are hoping for the best, of course. Any questions, guys, about this trade? Let me know if you are still in. Some of you guys, of course, are still in. Some of you guys, I'm sure, have closed it after seeing 60, 70, 80. We reached around 86. Maximum profit was 86 pips of profit on this trade so far, and we hope for 51 pips more than that, which would leave us with a limit of 137 pips at 109.75. Good luck, guys. Now, what else? We do have a position, or actually we had a position. I'm sorry to say that we had, although it was closed in profit. I really wanted this to go on and on. We had a short position on the pound yesterday from 29.12, and of course I say in yesterday's webinar, you can go back to the video and check. I said once we start trading up below the overnight low, I think it was 74. Yes, it is 74. Once we start trading below that, please adjust your stop to profit. And I did. I adjusted my stop to profit when we start trading here to 10 pips of profit and then to 20, and my trade was closed as at 20 pips of profit. So we had a short. Our short at 29.12 was closed at 28.92 with 20 pips of profit, or what I call a profit stop. It's a stop, but it is in the profit zone. So there you go, guys. This is the only trade built on yesterday's recommendations that was closed so far. The euro is still open, the dollar yen is still open, and we do have a buy on the euro yen that is also still open. Okay, yeah, we do have a buy dollar euro yen at 21.23 from yesterday. It is still open. The buy euro at 11.36, it is still open and fighting. These two are struggling a little bit, but things are getting better. The buy dollar yen is doing fantastic. It is in very good profit, but we are hoping for more. And the pound was closed with 20 pips of profit. So this is the only result from yesterday up so far. Other trades are still there. They are still open. So what about the pound and the euro yen? We're going to try to squeeze those in the next 20 minutes up until the end of this webinar. The pound, as you can see, the pound is still giving negative signs. Topping here very close to the moving average area, although we broke above this trend line, means nothing. Of course, when you break above a trend line and then find resistance at the moving average, that's not a strong break. It's not expected to go on. So I'm going to adjust my trend line to reflect the moving average. This makes much more sense to me. Why? Because the moving average here is touching the trend line. Okay, it's touching the trend line here. The slope of the moving average and the trend line now is very close to each other, and the current place where the moving average and the trend line are running is only pips apart. 93.90. So obviously this is the resistance that we need to care about for today. If we break above this resistance, that would change the weakness. This was, of course, expected weakness. We sold here. We made 20 pips of profit, not a lot of money. Honestly, I was thinking that this is going to give us much more than 20 pips of profit. But it's okay. It's okay. Any winner is a winner. Even if it's 20 pips, it's okay. It's fine. It contributes to increasing the account equity and balance. So it's fine. We did not lose money. However, one important question is, are we going to see more weakness? Is there still a chance to short the pound? Well, if we do not break above 28.93, in my own opinion, the pound will continue to dig deeper. But if we do break above 93, that will change. So this is the resistance. Obviously, I'm going to use 93. Let me see what are the highs on these candles. 92, 93. And as you can see, we are only 7, 8 pips below that right now. I'm going to use it as my resistance. Now, the support is going to be this trend line right here. Currently, it is in the 40s or very close to the 50. So I'm going to use 28.50 as my support. So resistance at 28.93, support at 28.50. Can we build that? Can we build that into a trading strategy for today? Well, with only 43 pips between the support and resistance, I really believe that we can use these numbers to place two orders. One which will be ready to capitalize if the resistance is broken, one which will be ready to capitalize if the support is broken. I really believe if we start trading above 28.93, things will get better for pound. If we start trading below 28.50, things will get worse for the pound. And I don't know, maybe if you can connect this to the euro, breaking 28.93 is actually the thing that we should expect. I know this might come as a surprise from someone who issued a short signal yesterday, but this is the exact reason why we are having these live sessions every day, because of course things can appear on the chart today that were not there on the chart yesterday, and we can change our minds. And we are going to change our minds if the price breaks 28.93. So if we break 28.93, add 10 pips to that, 29.03. Can we place a buy here? Of course, I'm thinking out loud. I may adjust these numbers, but let's see if this looks good from a risk management point of view. Of course, from a technical point of view, breaking above 28.93 is a good reason to buy. But what does risk management say? 28.40 is our stop. So it's 63 pips. Well, that's very, very fine. That's within the range that we are willing to accept. Actually, it's very, very good stop, in my own opinion, in my own standards, and what I really believe in. Yeah, 60 to 70 is the ideal stop that we should use. Now, of course, I'm going to issue another, issue another signal or recommendation, which is exactly the opposite to this one. Okay, so these are our recommendations for today. And now I want to place a limit on each of them. Honestly, we do have a limit from yesterday for the short position, which I really believe in. If we continue to dig deeper, 27 looks magnetic. You know, I really believe that the market is going to 27 if it continues to show signs of weakness. The first sign of weakness is not breaking above 28.93. The other sign of weakness is breaking below 28.40. If these two things happen, I really believe we can dig as deep as 27 figure. So 27 is definitely going to be my limit for the short position, just like it was yesterday. Now, what about the limit for the long position? For this, I will need to take a look at the chart. I want to use a chart with no important information. Okay. So, honestly, I really need to place it immediately. Unfortunately, we are already there. So, I don't think I can place an order this close to the market. Let me see what I can do. Maybe find a way around it. Maybe we'll add a pip or two. Yeah, it needs to be 4 pips above current level. Yeah, I'm placing it at 94. It's okay. 1 pip will not change this thing. So we placed an order at 94. Now the limit should be, of course, we have counted waves in a very bullish way. We expect that this will be wave 4. Even with, you know, the sideways action, that really confirms that it's wave 4, even with going down and up and then down and up. Wave 4 can be a triangle, of course, or any sideways corrective pattern, and that means that the further it goes to the side, it is fine. It is there's no problem with that at all. So after wave 4, of course, we expect wave 5 to surpass the top of wave 3. This is the norm. Wave 1, the size of wave 1 was, oh my god, this was more than 500 pips. So can we go higher from 2780s? 500 pips, that would leave us very close to 33. But we don't want to place such a gigantic limit. First of all, of course, it's going to take a lot of time. But I do not mind placing a limit at the next Fibonacci or retracement level, which is 3168. So 3168, I know that looks very far at the moment, but the chart supports targeting this limit, 3168. This is what I'm going to do. So this is our recommendations for today. These are our recommendations. It's not 1, it's 2. We have a recommendation to buy, and I think it's already in at 2903. Our stop is 2840. Our limit is 3168, and the sell recommendation is, of course, it is exactly the opposite of that. It is a sell at 2840, stop 2903, with also a good limit at 27. So our stops are 63 pips here and there. Our limits are much more than that. It is 140 pips to the downside and a gigantic 265 pips to the upside. Can we get that high? Well, who knows? We can hear something here or there coming from the UK, from the EU, that can give the pound very good support, and that will leave us close to our limit. Who knows? So we're taking this chance. We are placing a very, very large limit, but of course tomorrow morning we may decide to close it. If we are in a profit of maybe 30 or 40 pips, we'll say to ourselves, well, that's enough, let's close it. It depends on what the chart is saying actually. Now with this, of course, we're done for the pound. One last look before we terminate this exciting webinar that I really enjoyed with you guys is the euro yen. I want to take a look at the euro yen here. We do have a buy, but this buy is currently in a little bit of loss, not a lot. If the euro starts recovering and the dollar yen starts moving to the upside, this pair may accelerate very fast to the upside. And of course that will leave us with a big smile on our faces because we already have a long position. Let's take a look at the charts and see what they are saying in the last 10 minutes of this webinar. In my own opinion, guys, we are trying to move higher, but it's not as strong as I want it to be. We are wasting a lot of time in these areas. As you can see, this is a horizontal area that we have been trading in for more than 2 weeks. And with these candles, small, very small bodies, this shows indecision. So the market is not really supporting one direction or the other. However, the overall picture, as you can see, of course, we are moving to the upside, and having such horizontal price action, it's not a guarantee, of course, of continuation, but usually it is a continuation. The market still can drop, of course, but when you see horizontal movement after such a strong move to the upside, let me say maybe it's 65% of the time it's a continuation, while 35% of the time it's a reversal. Of course, these numbers are estimations. I did not conduct research to give these numbers, but if I had to estimate, these are the numbers that I am going to give. However, we really need to see the price breaks above the top of this horizontal area, which is in the 2140s. We are currently 60 pips below that. We are in the middle of the area, 60 pips below the top, and around also around 60 pips above the bottom. So we are almost exactly in the middle of that area. Can we do it? Let us switch to the 4-hour chart. The 4-hour chart, first thing I'm going to use here is retracement levels. And as we speak, guys, our long pound position at 94, we could not place an order at 93, it's 1 pip, it doesn't matter, is triggered, and we are in. Okay, what you need to see here is this. Can you see this, guys? We are dropping to the 61.8 retracement level around 2066, and then we are finding support. Here the low is 67, here it is exactly 66, and here it is 62. Obvious support in the 60s. Although the main support will continue to be, of course, the bottom of this area in the 20s. But for now, we really have something to depend on in the 60s, and this is very good. Now, all I need to see is for the euro-yen to break above the band of moving averages here, and that comes, of course, with recent highs. These are 4-hour candles, so this is the trading for the past 20 hours or so. The highest price we have been trading at in the past 20 hours or so is 91.5, 92. So I want to see the price breaking above 92 and holding in the 60s is the first good sign. The next good sign should be breaking above 90. If we break above 92, that is, in my own opinion, that's very good for the euro-yen. Next, of course, we need to deal with the top of this area, which stopped the price with tremendous accuracy 2 times, and furthermore, we approached it 2 times, not touch it. We came close to touching it, but stopped in the 30s. This area is in the 40s. 2 times, 2 daily highs in the 40s, 2 daily highs in the 30s. We need to break the top of this area, guys. We need to break the 40s in order to move higher. And when we do, I promise you, you will be very happy about our long position. Okay, guys? The only reason to stop believing in the position that we already have, the long position on the euro-yen, is breaking below the bottom of this area, which is 26. That's why we have a stop. Unfortunately, we cannot place the stop here because of risk management. If we want to follow the technical analysis, the stop should be here. But we do have a stop that is not very far. It's at 2050, and I'm going to keep it there. I'm going to keep it there because of risk management reasons. I wish I can place my stop here, but placing it below these 60s, below this obvious support here, also makes sense. So we have our stop here at 50. Okay, if this gives way, then, well, what can we do? We will be hitting a stop, but as long as we are holding above the 60s, we have a great chance of moving to the upside, and I really hope we do. We'll continue following this position tomorrow, of course, and I will be with you again in 21 hours with more profit, I hope. Yesterday's trading only resulted in one closed position. We have several positions that are still open depending on the recommendations given to you yesterday, but the only one that was closed is the short pound at 29.12, which was closed with a protective stop on profit of 20 pips at 28.92 after reaching maybe 40-50 pips of profit max. That was, I think around 50 pips. So when we reached 50 pips, we placed the stop at 20 pips, and the price came back up, and the stop was hit with a profit, small profit of 20 pips. That is the only result up until now. Tomorrow, I'm going to update you with more results. Of course, any trade that is closed from the recommendations given yesterday or today will be reported in tomorrow's webinar. Thank you very much for being here, everybody. I don't want to forget anybody. I don't want to mention any names, but you know yourself, you know yourselves, and everybody who's there in the chat. Thank you very much for being there. I myself got on the chat with you guys, and I wrote one comment. I'm going to be engaging with you more and more because I want you to enjoy this, and I want you to ask any questions that you may have about trading, about our recommendations, about what I think about the market. And I want you to go to your QTime FX trading platform, and of course I want you to take these great trading ideas that we are giving you and learn how to implement them with applying the right kind of risk management so you can achieve profit. As you can see, the euro is getting better and better. This is good news for us. Fantastic news. I really hope we keep on moving to the upside, and tomorrow we'll be talking about this. But don't forget to open your account with QTime FX. Why? Of course, we have many reasons for that, and I'm going to remind you of them all before I say goodbye to you guys. The main reason and the fantastic point of attraction that QTime FX is offering you is the low spreads they are offering. Guys, our broker was awarded the prize for the lowest Forex spread broker of 2018. You want to trade with the lowest spread, the broker who won the award for the lowest spread, or do you want to go and look for a spread that is not very attractive? It's your call. So let me know which one do you prefer. Of course, for me, I prefer to trade with a broker that is giving me great trading conditions, including maybe on the top of that, these kinds of spreads, or at least very high on that list. The spread should be very attractive, very easy to get in and out without waiting for the price to move a lot in order to cover these spreads. I still see some of my friends, some of my fellow traders who are with brokers that are offering sometimes 9, 10 or more pips on some pairs. Of course, not on the major pairs, but on cross rates. I see that type of spread and I'm frightened. Why are you guys using brokers that are still making you suffer with 9 and 10 and 12 pips of spread? Come join QTime FX and enjoy these unbelievable spreads with absolutely zero commission. And if that is not enough for you, come and get your bonus, $500 of free withdrawable real money. Not trading credit, real actual money, printed money, dollars, okay, greenbacks. So come join us, guys. Open your account with us and let the fun begin. You will never learn trading with only trading demo account. You will never do that without putting real money on the line and feeling the pressure to make the right decision at the right time when your position is doing great or when your position is doing horrible. In both cases, you need to make the right decision. And when the money is not real, you will not feel the pressure. If you have a position that is losing 50 or 60 pips on a demo trade, you will leave it. You'll say to yourself, well, let me close the screen and I'll come back tomorrow and see what happens. But when it's real money, I assure you will not do that. You will be forced to make a real decision on the spot. And I'm going to show you how to manage risk while talking, of course, about the greatest opportunities in the market every day with these webinars that are brought to you by FX Educast and QTime FX. So a big thank you to our sponsor QTime FX, our favorite broker in the whole world, and of course a big thank you to everybody who has been with us today. It has been a pleasure, guys. I really enjoyed every minute, and I'm sure you can tell I've been talking non-stop about these trading opportunities, about updates of what is happening to our trades, and I really hope I will have more good news for you tomorrow. 20 pips yesterday, that's not bad. It's okay, but it's not what we are really looking for. We're looking for much more than that. We still have trades that are fighting to achieve profit, like the long euro dollar trade, which is not there yet. It's not reaching the profit zone yet. We have fresh trading opportunities from today, like the pound, the long position on the pound, which was initiated just moments ago, and we are still, of course, at the same level where we opened this position, and we have trades that are doing fantastic, like our long dollar yen trade, which I really hope that by tomorrow webinar we will be talking about it reaching its 137 pips of a limit. That is a fantastic limit, and I really hope tomorrow I'll come back and say, guys, we have a limit hit on the dollar yen, 137 pips in your pocket. How do you like that? So with this, guys, I want to wish you a fantastic day or evening or night ahead, and I want to wish you more profit in the market. So keep your eyes on the market, check the opportunities and trading setups that we were talking about today, and use them to make some profit. As I always sign off, good trading and good luck to each and every one of you, and see you tomorrow, guys. Before I say bye-bye, thank you very much QTime FX for this generous sponsorship and keeping us online, giving these trading opportunities to you guys free of any charge. It's all because QTime FX. Come open your account with us. Contact us at fx_educast via Telegram, and we will be there to help you in each and every step of the way. It's been a blast. It's been a pleasure spending this time with you guys. Love you all so much. See you again in 21 hours. Bye-bye.